And now, in continuation of that elucidating talk, we have a panel moderated by Huang to talk about how we make stablecoins more safe and how we can have better regulation in the space. So please give a big round of applause to Huang and his panel.
All right, and I have the pleasure to introduce our panelists today to you. I'll start with Angela. Angela is Senior Policy Advisor at TRM Labs, a leading blockchain intelligence company. She was previously at MAS regulator for 13 years, ultimately as Deputy Director in charge of payment service licenses. She's a thought leader and advocate in blockchain compliance and analytics. Aaron is a regional head of compliance at StraitsX, a digital asset payment infrastructure leader, and the issuer of stablecoins XUSD, XSGD, and XINR. Aaron was previously an MAS regulator with over a decade of experience in compliance-related roles in both TradFi and crypto. Jeannie. Jeannie is Deputy Director of Public Affairs and Policy at Grab Financial Group. She spent 7 years with MAS as a regulator and was most recently in their Policy, Payments, and Financial Crime Group. Payal. Payal is VP of APAC, Risk and Compliance at Circle, the issuer of stablecoins USDC and EURC. She was previously BitGo Chief Compliance Officer of APAC and has TradFi experience from working at major banks such as Citi and JP Morgan. Everybody, welcome. Thank you for your participation. So let's go to question one. The world has only a few strong currencies. This is a hard one. The recently published report by Nick Carter's Castle Island Ventures that we all saw repeatedly highlighted an important real-world use of stablecoins as an open, easy, and cheap means of US dollar access for people in emerging markets with lagging banking infrastructure and for those under suppressive regimes and depriving inflation rates. Circle CEO Jeremy Allaire mentioned the same in one of his recent talks. US dollar-pegged stablecoins help these people defend against local inflation, serving as an alternative store of value. They can also be used as cross-border payment instruments and as a means to purchase globally traded assets, such as US Treasuries, gold, stocks, serving as an important medium of exchange for the global financial system. They've become a powerful financial inclusion tool. However, in regimes where financial inclusion matters most, for example, Latam, Africa, many parts of Southeast Asia, and in India, central banks might be rather concerned with US dollar stablecoins because the US dollar is much stronger than local currencies, and if given the option, people will hold more US dollars. This seems a difficult regulatory challenge because out of the roughly 180 currencies, only a dozen are strong. And you've seen in my previous talk, Ecuador in year 2000 had to give up their national currency and was forced to adopt the US dollar, right? So, Payal, Circle's USDC has achieved worldwide adoption, and you've just announced big partnerships in Brazil and Mexico with leading banks. How are you resolving central bank concerns?
Yeah, thank you. And thank you for having me on this panel. So, Circle's approach to market entry, and I'll qualify this by saying that we're still at the relative early stages of our internationalization, but our approach to market entry is very much through the front door. And what we mean by this is any sort of market entry evaluation that we're doing is obviously based on commercial pipeline, but also the relationships that we have on the ground with regulatory bodies, with the central bank. So in the example that you've cited with Mexico and Brazil, the the partnerships that we have with the central bank there was based on a very long and protracted engagement with the central bank to ensure that they understood Circle's business model, our value add to the economy, our seamless ability to be able to work in partnership with the central bank in order to further cooperate the economic policy that they have on the ground, really emphasizing Circle's mission around efficiency and also financial inclusion, which is very much at the center of a lot of financial policy-related concerns within these markets.
So Mexico and Brazil, for example, do you have to keep your reserves there in these countries?
We do not.
Okay,
No.
wow. That's very
But
successful.
what I would say is that what we are seeing and hearing more and more is the requirement to have reserves onshore. We are seeing more and more regulators looking to localize and protect local consumers. And so ensuring that the reserves are held onshore is obviously an ideal way in which that can be done. But for global businesses such as ourselves, where we are primarily headquartered in the US and our operations are set up to service that business model, as we look to scale and internationalize, having reserves all held onshore obviously creates some level of operational friction in terms of how our business is set up.
Right.
It's certainly something that we're evaluating. We have processes in place to enable that. For example, in MiCA, we are seeing that that is a requirement. So setting up our business to enable that is certainly something that we're working towards.
Understand. And I also understand, I have some personal experience, it's harder to find good banks in some of these regimes to custody your reserves.
Exactly. And so what we found post events with FTX and SVB is it demonstrated the need for us to have as many contingency banking partners as possible. However, now what we're really looking for, in addition to having as many banking partners as we can, is really evaluating how robust and sustainable some of those relationships are. So ensuring that we do as granular level due diligence on our banking partners as they do on us, to make sure that it is a mutually reciprocal relationship, and one that is based on trust and understanding around the suitability of that partnership.
Got it. All right, Aaron, congrats on StraitsX on getting the major payment institution license for 6 out of 7 categories. XREX acquired the CM, and we will be launching XREX Pay to enable stablecoin-based B2B payments. It will support your XSGD and XINR stablecoins very soon. And as you go to market with XSGD, given that the Singaporean dollar is a stronger currency in Asia, do you foresee substantial demand from regions such as India, Indonesia, Malaysia, Thailand, Vietnam, and the Philippines? And if so, what are your strategies to resolve central bank concerns?
Yep. So for us, other than Singapore, we are also in Indonesia. That's why we have the XIDR. I think our key focus and our key concern about how we can partner with the regulators is to go into those countries, speak to the regulators, be transparent with them in the fund flow, because ultimately, although we are a stablecoin issuer, we are also a payments company. And when we talk about payments, we are very particular about fund flow. What we want to do is to be able to have a use case for merchants in Indonesia to make payments overseas, and for our merchants to make payments into Indonesia. So we go into the market, do a pre-consultative meetings with the regulators to really understand what are the regulatory requirements. And yes, we do have to set up maybe entities regulated in Indonesia, hold base capital there, hold share capital there. But ultimately, what our primary focus is to ensure that the fund flows are transparent to the regulators. Even if we take phased approach, stages approach, we will still go through with them. Or alternatively, we'll work with local collaborators like stablecoin issuers in those countries or banks in those countries to ensure that the fund flow are transparent. And when we pay to merchants overseas or receive payments from overseas, the banking partners are aware of the fund flow and ensure that the fund flow are transparent. So that is how we tackle the central bank concerns.
Understand. Is it fair to say that to these governments, I mean, because of the demand for US dollar liquidity, there's so much transaction happening with informal channels and unorganized channels, Hawala networks, they don't have visibility there anyways. So if you go in and provide that visibility, it's a preferred method.
Yeah, correct. So for us, we will only typically go through banks and licensed payment companies. So in Indonesia, we have 2 or 3 payments companies that we're working with, and they're owned by our group. So with all these licensed entities that we're working with, there are transparency in ensuring that those transactions are above board, and they are not via routes where the regulators cannot regulate.
Got it. Thank you, Aaron. Jeannie, I believe Grab Wallet is one of the largest Asian-based digital wallet, supporting stablecoins such as USDT, USDC, and XSGD. What's Grab Wallet's vision with digital currency support? Is it to tap into the crypto-enabled user base, or is it driven by demand that your users need stablecoin support?
Thanks, Wayne. Thanks for having me here as well. Well, at the end of the day, I think we are really driven by solving user pain points. And we think about DPTs and blockchain infrastructure as a way to kind of solve problems that are relevant to the Grab ecosystem. This is both for our consumers as well as our merchants. So in this particular case, it's about how we can make payments and transactions simpler, cheaper, and more accessible. And we want to give users choices as well, and ideally do so by abstracting them away from the perceived complexities of Web3, right? So by embedding these solutions into everyday use, be it domestically or across borders. And I'll share a couple of examples to illustrate this. So as of March this year, if I'm not wrong, we have enabled travelers into Singapore to top up their GrabPay wallet with stablecoins like USDC and XREX, as well as other established digital assets, so Bitcoin, ETH. And then they can use these to pay for Grab rides, order Grab food, or pay at merchants that accept GrabPay. So it's been about 6 months since this was launched, and we've seen pretty good organic take-up and repeat users, which really suggests to us that this plugs a gap, right, and meets the needs of our traveler segment. Of course, big shout out to our partners, Circle, StraitsX, AAA, without which this would not have been at all possible. We're monitoring the progress closely, and we look to scale to other markets where possible. The second example is about driving more sales towards our merchants. So we are working closely with StraitsX as well as Ant to safely enable cross-border settlements between foreign e-wallets as well as GrabPay merchants here in Singapore. So what this means is when travelers come to Singapore, they can use their home wallets, so be it Alipay, KakaoPay, Gcash, etc., to pay at merchants that support GrabPay. And the underlying token behind this is purpose-bound money, or PBM, right? And with this, it ensures that only verified user wallets can pay to eligible whitelisted merchants, and there can be transaction limits set to deter fraud. So we believe that is something that's coming up very, very soon. We are quite excited for how it will go, and the best part, I think, is that there is really no change to the user or merchant experience. So a user in Singapore who may not be familiar with the payment scene here need not worry about, oh, how do I pay this merchant? Because it's going to be exactly how he would do it back home. And similarly for the merchants, they don't have to worry themselves with reconciling different currencies at the end of the day.
And I remember you guys had a pilot run of purpose-bound money way back in 2022 already, am I right?
Yeah, so that was the first iteration. Since then, we've built on it, learned from the various roadblocks we face to solve for different user problems and different problem statements.
Got it. Thank you, Jeannie. Angela, blockchain's openness, transparency, and immutability makes it the most advanced trust acquisition technology. While blockchain-enabled fintechs may attract regulatory concerns, can we also use blockchain's advantages to resolve these concerns and acquire trust?
Thanks, Wayne. The short answer is absolutely, and then I'll go into the long answer. And I think it's very telling and appropriate that a theme that's kind of reverberated in the answers from my fellow panelists is around front door access, right? Engaging with the regulators and trying to set things right from the get-go, and enabling that kind of trust and transparency at a human level. But I think at an infrastructure level, blockchain data also sets sets up the ecosystem for trust and transparency. And that's why it's even more important to have this kind of open dialogue at the human level, right? When we talk about digital currencies, we talk about public blockchains, everything is available on a public ledger. And I'm going to come at this, topic from the perspective of a data provider, TRM Labs. Basically, every transaction is available on the blockchain. That this data is available to anyone, including regulators. And then there are companies like us, which basically are in the business of being what I call Google Maps for the blockchain. Basically, when you look at raw blockchain data, it's in cryptographic hashes. How do I know who this blockchain wallet belongs to? It's kind of like looking at a satellite image without any context. But then when you look at the same satellite image on Google Maps, you have location data, you have directional data, you can even get traffic data these days. And that's basically what TRM Labs does. We provide real-world, we attribute this blockchain transactions to real-world entities and to and actors. And this can be used both by private entities to combat money laundering, countering financing of terrorism, and also by regulators who are seeking to understand the activities of their regulated entities or the entities that are seeking to be regulated. And I think we have seen regulators start to understand the potential here. And in fact, we're seeing guidance from regulators in, for example, the New York Department of Financial Services, the UK Financial Conduct Authority, and then closer to home, there was an industry guidance by a working group that worked closely with the MAS and the CAD on the use of blockchain analytics and the power to kind of detect and fight financial crime in terms of transaction monitoring. In traditional transaction monitoring, you're basically looking at the counterparty, right? When on the blockchain, there's infinite traceability. So depending on the willingness, depending on the resourcing, there is that potential to really use that data to address financial crime and illicit activity in a much more holistic way. And I think regulators are tapping into this. They are looking at this data, and that's why it's good that the private sector is also being transparent on them. They are starting to have more expectations around, more specific expectations around the private sector's use of this data. It's not just enough to buy a tool. You have to have the people that have the expertise to know how to use it, apply the rules in the context of your business. And I think, coming together, it can create a very kind of powerful tool to fight financial crime. And I think, we do this at the entity level, we do this at the transaction level, but I think in the stablecoin sphere, we've seen this happen at the token level, right? Where we work with issuers like Circle to basically monitor the health of the token, to monitor the risk level of transactions in their token ecosystem. What is the use, for example, of USDC in the wild? These are things that issuers are thinking about proactively, and they're harnessing the power of blockchain data to actually look at that more closely and efficiently.
Yeah, just to add to that, I mean, as Angela mentioned, we have the fortune to use such an awesome tool such as TRM. One of the challenges that we face with having access to this information is, as the issuer, what is our responsibility of USDC being used out there in the quote-unquote wild, right? So right. What action are we able to take? What action are we required to take? What is our responsibility outside of our regulatory perimeter? So these are sort of nuanced discussions that we're having not only with regulators, but also with our banking partners. Where are we able to draw the line between our responsibility and what we see as illicit activity taking place on our platform with our direct customers? And then subsequently, what happens when USDC moves beyond Circle's regulatory perimeter, and what action are we able to take on the back of that?
Got it. So, Aaron?
Yep. So I think same for us as an issuer. I think the crux is, with all this information that we have on the blockchain and with all the wallet addresses that hold our stablecoin, what do we do with this information? Do we have to freeze all the funds that enters into any addresses, or is only when there is a sanctioned wallet addresses then we freeze the funds? Do we use the data analytics tool to analyze our distributors, our exchanges, at least our tokens, and what do we do with those data? Do we reach out to them proactively and say, oh, why is you interacting our stablecoins with maybe high percentage of dark, of high-risk sectors? So these are all the questions that I feel is nascent, And we are also grappling as issuer to understand where is our obligation, where is our responsibility, and then what do we do with those data. And also tokens all in a while, if we see a high concentration of risk in a certain wallet, what do we do with them? Because they are student anonymous, do we reach out to them? How do we reach out to them? What do we do with all this information and data? So I think we are at the stage where we have information and data, but how do we map a SOP or a procedure that is fit for purpose and is not too onerous on the issuer, but at the same time able to meet the regulatory requirements?
Agreed. And you know, it's one thing, and I think you touched on the idea of sanctions. That's one piece. The other more challenging piece is where it's not sanctioned related but illicit activity. You know, if we're not licensed in markets, who are we filing SARS with? You know, what action, to your point, are we reasonably able to take on the back of that? So having access to all this awesome information is actually just a double-edged sword well.
So I have a question for you folks. I've seen law enforcement, these blockchain intelligence tools like TRM, very intuitive for law enforcement. They know how to use these tools intuitively to find crime and to, you know, make arrests, prosecution. But for regulators, do you folks see that eventually some analytics company, for example, TRM is going to build customized dashboards for regulators? For example, if a central bank is concerned, hey, so many of my, you know, our citizens are accessing US dollar liquidity and our Forex control protocols are being broken, and we want to know what's going on. Do you guys see that a custom dashboard being built for regulators?
Yeah, they have asked, and in some cases we have, you know, worked with certain FIUs to develop kind of like a national level monitoring. And you know, because I guess the lens at which they look at, you know, has to be quite customized. For example, even with issuers, that's the case. But I think even with the main tool, there's a lot that regulators can do. In fact, I have a colleague at TRM who was formerly with the UK Financial Conduct Authority, and literally his full-time job was to spend all day in these tools trying to find unregistered, unlicensed activity in the UK, trying to, you know, unravel some of the SARS that are reported, and you know, even understanding the activity of their supervised entities. So, you know, kind of like maybe a few quick examples of how regulators are using this data, right? For example, they're able to look at blockchain data at an entity level. So we do have attribution on specific, for example, crypto exchanges or payment services companies. And, you know, and yeah, of course, including, you know, our clients like XREX. And, you know, it's kind of like a Google review page, right, for the exchange, where basically we have all the on-chain data of all their transactions, what are some of the risk exposures, what is the level of risk exposure, and then also off-chain, and complemented by off-chain data, like who's the leadership team, who they can contact, you know, for, you know, formal requests, what is their licensing situation, even, you know, open source intelligence on some of the recent news on that entity. So it kind of gives, you know, the regulator a pretty holistic picture of this entity without even, and this is real time, right, and can be outside of the regulation.
And this is off the shelf, this is not.
Yeah, this is off the shelf. So they can just go in, and it's like Google, you know, they can just search in TRM for an entity like XREX or Circle or StraitsX, and it will pull up this data, and they can look at it, and they can compare it, for example, with what's being reported by the entities, right? And that kind of, I always feel like I think regulatory reporting is still very important, but there's only, as all the compliance officers will know, there's a limitation to how frequently that can be done, I think. And here in Singapore, we're really testing the limits of that. I think it's at this point monthly reporting.
Yeah, that's monthly, semi-annual.
Yeah, monthly reporting. So it kind of provides a real-time source for data for the regulators off the shelf to just kind of triangulate what their entities are telling them, and even like, you know, when they're reporting the local data, how does that fit into the picture of what this entity is doing at a global level as well? Yeah, and then there's some kind of, you know, when we look at unlicensed activity, there's some kind of like telltale signs. For example, we give information on what are the currencies offered by this platform, and if you see your local currency and they're not licensed, that should ring an alarm bell. Or, for example, if you see that they have transactions with a license exchange in your jurisdiction, then that license exchange may be having a nesting arrangement or providing liquidity for them to access your markets. Yeah, so I think even off the shelf in the tool, there's a lot that regulators can do, and they're getting better and better at doing that. I think law enforcement, to be fair, is a little bit ahead of the curve, but like regulators are also tapping into this, and we can see that in the specificity of guidance that's coming out. And I think some of the entities that interact with regulators will also feel it in the detail of the questions that are being asked in terms of their own monitoring and analytics processes.
Got it. Thank you, Angela. All right, moving on to question 2. Stablecoin regulatory frameworks worldwide. As a payment provider, I've really experienced that once, an industry, once you have some license, once regulators come out to say, okay, this is a licensed entity, it really accelerates user trust acquisition. So I see, regulation as having the potential to be a really good tool to bring mass adoption to stablecoins. So here's the question. Here, the 4 MPI licensees all acquired one specific coverage that enabled our stablecoin-related services, the digital payment token coverage. MAS published its consultation paper in 2022 and finalized a framework last year to specifically grow and regulate stablecoin issuance. It also published its consultation paper on stablecoins, specifically in 2022, and finalized its single currency stablecoin framework last year. Last year, MAS also published its technical paper on purpose-bound money as part of its full-blown digital money initiative called Project Orchid. It elaborated on how PBMs differ from programmable money and how they make more fungible but programmable mediums of exchange. In America, the U.S. President's Special Working Group on Financial Markets, co-led by the Treasury, FDIC, and OCC, released the Stablecoin Report in 2021, which solidly outlined a preferred stablecoin regulatory framework. Last year, the House Financial Services Committee passed 7 pieces of legislation, including the Clarity for Payment Stablecoins Act, which collectively established a regulatory framework for payment stablecoins. The Hong Kong Monetary Authority recently published stablecoins consultation paper attached to a proposed stablecoin regulatory framework and is preparing for a bill for the Legislative Council. Japan amended its Payment Services Act in 2022, folding stablecoins under the electronic payment instruments. Centralized stablecoins reserved with TradFi instruments such as bank deposits and treasuries are considered digital money type stablecoins, while those backed by native crypto assets are considered crypto asset type stablecoins. To further grow stablecoin issuance in 2023, the Japanese regulators amended the Banking Act, the Payment Services Act, and the Trust Business Act. In Europe, a few months ago, MiCA enabled its comprehensive stablecoins regime, and Circle became a fully licensed issuer under MiCA. We love for each of the panelists to share one of 2. One, which parts of the MAS efforts here in Singapore do you feel most strongly about and hope to share with regulators in other regimes? 2, which foreign regime stablecoin efforts do you especially appreciate? And if you go back to your regulator jobs at MIS, or you become a regulator, that you would push for internally at MAS? And let's start with Payal.
Yeah, sure. Okay. So you talked to a lot of regulatory developments, and I'm going to plagiarize something that my former colleague actually, Chua, said, which is, I don't feel like we need more regulation. We need better, more considered, pragmatic, proportionate regulation that thinks through risk and also balances consumer protection. So, in a lot of ways, what I appreciate about MAS's approach is there is absolute regulatory clarity. There is no denying that MAS takes an ultra-conservative approach based on consumer protection. But there is no denying what the requirements are and what it takes to be a license holder in Singapore. Mm-hmm. I have broader questions around what this means for the ecosystem here. Mm-hmm. That being said, regulatory clarity in the absence of any regulations is certainly where I would want to index on. In terms of where do I see the best sort of framing around regulations, you pointed to MiCA, and whilst it's not under sort of my mandate, I have seen merit in the approach that MiCA has taken around providing that regulatory clarity, thinking through consumer protection, but also thinking about harmonizing how we navigate regulations across multiple jurisdictions. When we think about the businesses in which we operate, they're intended to be global in nature. So having a regulatory framework that enables passporting, that enables mutual consent, that being licensed in one one geography enables you to operate in another is certainly something that I think is advantageous and a blueprint that will enable thoughtful but pragmatic innovation, that regulation that promotes innovation.
Got it. Angela?
Yeah, I think I definitely clarity is a big one, and I think we are very fortunate, not just in Singapore but even other jurisdictions in APAC, to have that kind of ultra clarity. And I think that also comes from a very consultative approach to policy making, where it's not just the regulators in their ivory tower kind of coming up with laws, and then the next thing you know it's been passed and you're supposed to comply, but you're like, okay, how exactly do I comply? What does this mean for me? There's a whole extensive consultation process before that comes out, public consultations as well as closed-door soft consultations. And I think MAS is actually going down to even consulting on the implementation, right? They do make an effort to understand, for example, this requirement, let's say segregation of customer assets, right? Like, how are you going to implement that for your fiat assets and for your crypto assets? What does this mean? What are some of the difficulties? And yes, there have been cases where, entities have said it's going to be very onerous, it's going to be difficult, costly, and MAS has just gone ahead. So they won't always agree, but they have counted the cost, right? It is a very conscious decision when they have decided to create this friction. And like Payal said, there's no denying that in some aspects it is ultra-conservative, but there's no doubt in what the expectations are.
Got it. Thank you. Jeannie?
So I think Payal and Angela have very comprehensively touched on the regulatory aspects of MES's mandate. Maybe I'll comment more on the developmental arm that they also have. And I'm not saying this, I promise, just because I was from MES, but at GREG, we really appreciate the progressive and open approach that MES takes towards working with industry players, right? The whole value chain from the time we conceptualize ideas, develop pilots, iterate on them, all the way to bring them to market. So like you mentioned, and I touched on briefly, Project Orchid is a great example. It has had several pilots since its first iteration in 2022, and each solving for a variety of use cases and problem statements. And we appreciate this platform because, working with industry partners and MES to quickly test out ideas on real customers allows us to quickly sense check product market fit, to make tweaks as necessary, as opposed to having to see through everything from start to end that could maybe take years otherwise. And it's especially helpful, I would say, that the programs are all laid out in bite-sized chunks, yet with long-term objectives already defined. And each pilot works on past learnings and evolving and maturing technology, use cases, so that it gets a bit more better and a bit relevant for the user each time. So the cross-border interoperability project I mentioned, like the one with Alipay, is a great example of fruit of this project. Yeah, so we hope to also work in the same way with the other regulators across the markets. Yeah.
Got it. Thank you, Jeannie. Aaron?
Yeah, so to also add on, I think StraitsX, we are a key benefiter to the Project Orchid. So what I appreciate about MES is that before they have this development arm where they can pilot test use cases or new cases. And what we are really trying to derive from the Project Orchid is how do we program money? How do we ensure that underlying assets or the digital currency or XREX is really being used for the stated purposes? So we have tried this Project Orchid in the last Singapore FinTech Festival, where we program the money in such a way that the XREX can be unwrapped only when it's being spent at specified merchants. So if you think about the use case, yes, it's a proof of concept, but the use case allow us to preemptively already define the use case of that stablecoin, because we want the stablecoin to be used for payments or services or goods and not to be used for illicit purposes. So we are creating a very conducive yet very intuitive ecosystem where the stablecoin is only used within a predefined logic. And if you want to expand that, so that is for the proof of concept ideology, but an extension of that is how do we then socialize that idea with the policy team, with the supervisory team to say, actually we can also embed the definition of payments on goods and services into a stablecoin and maybe attract a lower ML and TF risk and hence lower scrutiny once that programmability is being anchored into a stablecoin. So that's where we are appreciative of MES because they give us a venue to explore the concept, and if the concept is ready, we can actually use it to tweak the policy and regulatory around the use of stablecoins.
Got it. Thank you, Aaron. All right, we move on to scams. As you've seen, my last talk was about scams. Stablecoins have become a preferred tool for scammers. And it's been really hard, especially for us to detect victims on our platform because their profiles are pretty random. And it's been much easier for us to detect organized crime. Any of you want to share secret sauce in fighting against scams?
Yeah, so let me start off. So our stablecoin is used primarily for payments. So one big scam case that we have always been seeing is money mules. And money mules has been a prevalent issue that we are facing now in the last few months. So essentially what money mules happen is that they are part of a web and they are being paid to move funds through fiat and then through crypto. And we have seen cases where it's a first-party bank transfer, the fund comes into our ecosystem, they whitelist the address, the funds immediately goes out. And that is a very typical fund flow for any stablecoin. You wouldn't think unnecessarily that there is any risk in that because people who use stablecoins is either on-ramping or off-ramping. But slowly we start to realize that it's a part of a larger scheme. And how we have been detecting is, of course, it's a bit of trial and error. So we have to understand the behavior, the heuristic behavior of money mules. And what we have noticed is that they typically test your transaction, your system with $1 or $2. So they test it, they whitelist address, then they will start to use a bit more, like $10, $20. They will test it a few rounds, and then once they realize that, okay, the whitelisted address works, I can send funds out to a whitelisted address, I will then send bulk in badges funds within a span of 5 or 10 minutes. So we start to analyze that indeed the behavior of a money mule is very similar to the Accord. So what then we have done to prevent money mules or try to eliminate or mitigate the risk that platform is being used by money mules is that now we will look at this transaction patterns, we will already lock the account preemptively before the money goes out into the wild. So that is some methods that we try to battle with scams, but that takes a lot of learning about the behavior, the mindset of a scammer, and we try to imitate what they will do. But obviously, what they will do is that, okay, this use case can't work, they will think of other use cases. So we always have to be a step ahead of them and try to think of what will they be then thinking otherwise and try to prevent.
Got it. And I'll just throw one last question to Angela. XREX has been using Ethereum Labs to fight scams here in Asia. What should we look forward to? How are you improving your attribution in Asia against scams specifically?
Well, for one, we have a full-time team that is just focused on getting attribution on scams and fraud, and especially in Asia. And I think, so you know, that's just like a constant work in progress for us. I think, you know, we're very happy to be able to support XREX, compliant players like XREX who want to contribute to the ecosystem in terms of detecting and really depriving these scammers of their illicit gains, right? Yeah, I think there are kind of like two pieces that we want to push a bit more on. One is education, because sometimes looking for a scam is not like looking for a needle in a haystack. It's like looking for a needle in a stack of needles. Because some of these scammers, firstly, it's like an industrialized. It's literally industrialized
The
scamming,
industry,
right?
yeah.
And they are so good at coaching their victims that the victims are coached to sound like crypto experts when you do your enhanced due diligence calls. So how do you know if they're a scam victim or if they're really a crypto expert? I think it's very challenging, and that's where the education piece comes into play. And we've done some work on that in Australia with a crypto exchange there to kind of basically incentivize Australians to learn about scams by giving a small incentive and publishing an education module. This is something we want to do more in other parts of the world as well. Because I think at the end of the day, you are the only one that can prevent yourself from being scammed, and you kind of need to have that awareness and that mindset. And I think the other part is also, we need to make sure we don't engage in any victim shaming. I think it's very important for scam victims to be able to speak out and to be able to share their stories, and we have seen that. And when that happens, I think we need to be very supportive of that because that's a huge part of the education process. And I think there's a lot of shame associated already with having fallen prey to a scam. So education, we want to do a lot more work on that. It's super important. It sounds a bit back to basics, but I think it's super important. The other part, I think, is kind of information sharing and industry collaboration. So TRM has worked with partners around the world to launch Chain Abuse, which is basically our free scam and fraud reporting platform. And today we have over 600,000 reports, which basically can be filed by any one of you. You can go on chainabuse.com if you've come across a blockchain address that's associated with a scam or a fraudulent crypto scam website. You can actually report these on Chain Abuse, and anyone can go on Chain Abuse and search this database. We also provide this information to law enforcement, and we offer victims the option to opt in for victim support and to connect them with their local law enforcement. So, and we also have many of our private sector partners, including like Circle, contributing to this initiative, and that really illustrates that power of firstly open source information and also information sharing within the industry in terms of exposing these scammers.
Got it. Yeah. Chain Abuse, we also contribute quite a bit. It's a nice community. All right. With that, we're out of time. Thank you, panelists, and thank you for having us.
I actually didn't realize that we had the architects of USDC on Grab Wallet here all in one go. That's absolutely amazing. Has anyone here used USDC to load their Grab wallets? Yeah, it's an absolutely amazing feature. It's great. I'm glad that you guys have done it. It's not possible without a clear regulatory framework. And if you haven't tried that feature, you should. It's very, very interesting.